Bitcoin has undergone a remarkable evolution, from its dubious beginnings fueling online criminal activities to being hailed as a legitimate competitor to gold. The year 2021 marked a turning point as major players like Tesla and MasterCard embraced cryptocurrencies, nudging them closer to widespread acceptance. Yet, regulatory scrutiny and market instability cast shadows over Bitcoin's trajectory. Born amidst the 2008 financial crisis, Bitcoin, conceptualized by the enigmatic Satoshi Nakamoto in a pioneering white paper, envisioned a decentralized peer-to-peer electronic cash system, liberating transactions from traditional banking institutions. Tom Robinson, co-founder of Elliptic, reflects on the early days of Bitcoin enthusiasm, characterized by clandestine pub gatherings in London. As Bitcoin navigates its path forward, its disruptive potential remains undeterred despite the hurdles it faces. Bitcoin and other cryptocurrencies rely on a revolutionary technology called blockchain, essentially a digital ledger maintained by a global network of computers rather than a centralized authority like a bank. Unlike traditional currencies such as the British pound, cryptocurrencies lack government backing and derive their value solely from market demand, which has surged dramatically in recent times. In the whirlwind of 2021, Bitcoin broke numerous records, escalating from one peak to another. Its journey was akin to a rocket launch, starting the year around $9,000 and skyrocketing to an astounding high of over $68,000 by mid-November. When asked about the driving force behind this meteoric rise, Mark Hipperson, CEO of Ziglu, a cryptocurrency trading platform, cheekily mentioned Elon Musk, alluding to the tech mogul's influential tweets and endorsements. Indeed, the allure of Bitcoin has attracted not only tech tycoons like Musk, but also a slew of celebrities, adding to its mainstream appeal and public awareness. Moreover, amidst concerns of escalating inflation triggered by unprecedented government stimulus in response to the COVID-19 pandemic, investors sought refuge in Bitcoin and other cryptocurrencies. The unprecedented injection of trillions into the global economy through measures like quantitative easing has fueled fears of diminishing purchasing power of fiat currencies like the US dollar. Consequently, individuals and institutions alike are increasingly turning to cryptocurrencies as a hedge against inflation and economic uncertainty. As Hipperson aptly noted, the quest for safe havens amidst economic turbulence has significantly bolstered Bitcoin's performance throughout 2021. With influential figures championing its cause and a growing recognition of its potential as a store of value, Bitcoin continues to redefine the financial landscape, one digital block at a time. Bitcoin's value primarily derives from the principles of supply and demand, as well as investor sentiment. The original code of Bitcoin limits the total number of units that can be minted to 21 million, establishing scarcity similar to physical gold. This scarcity, combined with increasing demand as more people become interested in Bitcoin and seek alternative investments amidst concerns about monetary and fiscal policies, contributes to its perceived value. Many investors liken Bitcoin to digital gold due to its limited supply and its appeal as a potential safe haven asset during times of economic uncertainty. As Bitcoin's value has risen, it has attracted interest not only from individual investors, but also from large institutional players, including crypto-native trading firms and established Wall Street institutions. This increased institutional involvement has contributed to the recent surge in Bitcoin's price, as well as the broader adoption and acceptance of cryptocurrencies in general. In late 2017 and early 2018, the meteoric rise and subsequent sharp decline of Bitcoin and other cryptocurrencies were largely attributed to speculative trading by amateurs and speculators. However, the landscape has shifted since then, with the entrance of large institutional investors and corporations into the cryptocurrency market. Tesla's $1.5 billion Bitcoin purchase in February 2021 marked a pivotal moment in institutional acceptance of cryptocurrencies. The public listing of Coinbase further legitimized the industry. Professor Carol Alexander notes Bitcoin's shift towards mainstream use for transactions, with its adoption by U.S. institutions and platforms like Coinbase enhancing its credibility. Regulatory approval of ETFs is set to increase accessibility to Bitcoin for institutional investors. ETFs, like the first U.S. Bitcoin-linked one approved by the SEC in 2021, function similarly to company shares, offering a diversified collection of financial instruments mirroring indices or sectors. This move marked a significant milestone for Bitcoin enthusiasts, who anticipate more ETFs tracking the cryptocurrency's performance. The legislation in El Salvador recognizing Bitcoin as legal tender was indeed groundbreaking, sparking hopes for broader cryptocurrency acceptance. However, challenges persist, particularly regarding its volatility. Critics argue that extreme price swings undermine its stability as a medium of exchange. Bitcoin's early association with illicit activities, like the Silk Road, tainted its reputation. Yet its traceability has become a double-edged sword in combating crime. Over time, it shifted from rebellion symbol to a Wall Street investment vehicle. Encouragingly, data shows a decline in crypto transactions linked to illegal activities, but its soaring value attracts criminal exploitation. The May 2021 ransomware attack on a U.S. pipeline paid in cryptocurrency reignited debates on crypto's role in crime. Blockchain helped track the ransom, showcasing its potential in fighting cybercrime. But officials express concerns about crypto misuse, highlighting regulatory challenges due to its decentralized nature. Countries like El Salvador embrace Bitcoin, while others, like China, regulate it tightly. This discussion underscores the challenge regulators face, balancing crypto's benefits with risks like money laundering and cyber threats. Despite mainstream demand, investors like Carol consider selling Bitcoin due to concerns about price crashes, tether-related manipulation, and environmental impact from mining. Predicting its future value is contentious, reflecting its nascent and evolving nature.